Alrighty, traders. Hey, this is Blake, and hope you guys are having a great Friday. And what a wild non-farm payroll, huh? Been a day. Been a day. Where are my controls? Sorry, I'm trying to see where my controls are here. I don't see them for the webinar. Can somebody say something, please? Just type or say something. Cannot find my webinar. Oh, there they are. Okay, great. Thank you. Yeah, when you guys chatted, you hit the chat feature. It actually pushed the window forward. Like when you're down here across the toolbar, and you can even hit these. And I'm like, okay, here's my meeting controls. So I kept hitting it, and I didn't see it. Like I didn't see it until you guys sometimes Zoom's funky like that. So anyway. Hugo said, hey, or he asked Blake, hey, are you short some euro? I am. I'm still short some. I actually closed some out on the move back to 90, but I still am short a clump of it. But you know what I'm long is I'm long a little bit more aggressively than I really want to be right now. But it's fine because it's working. I'm long the Euro New Zealand. So kind of don't mind if the euro squeezes a bit, but I'm long quite a bit of this. Let me get rid of this here real quick. But I wanted to buy a lot of this at 166 and change, just above the 166 level. So I got hit on a couple of bids. So I'm short some euro dollar, but I'm long euro sterling. I'm long euro New Zealand. Okay. And so I'm a little indifferent on the euro. I got stopped out of the Kiwi short. That one probably, when I always tell people, when I get stopped out of something, it's probably the time to reverse. Because I swing trade most of the time. Most of the time, I'm not scalping. And if you guys don't know me by now, the only time I'm really scalping is if I get really profitable really quick. So, for example, let's say today, because I shorted the euro, my cost average is basically right here on what I have left. But, well, it's actually a little bit lower, but it's at like the 95 level. But anyway, when if I shorted the euro and by right now we were trading down at 118.20, I would take everything off. Right. So that didn't happen. So I'll swing this a little bit as long as, we stay above or below these highs. You know what I'm saying? Hold on really quick. It's interesting. Hey, I'm gonna here's this is I want to clarify something because there's a lot of confusion. We were talking on the webinar. There's Rick in our chat room here. And if you guys are listening in and your guys are in chat, so Rick right here, and Rick, I'm sure we actually text each other too. Rick is Rick Reedy. So I've met him in person in Dallas multiple times. He's great. Long-term, we've known each other since, we met in person. I think the first time we met in person was probably 2009, 2010. And that's when I was still at the Wise Trade Group, and I had Kevin Ferry, who is at the Cade Winery now. Kevin Ferry came and spoke to our group from Chicago. He was always on CNBC in the morning, blah, 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 blah. Anyway, that's the first time I met Rick in person. Or was it the first time? Maybe that was the second time. He said it was the second time, I think, because he's met me before. Oh, no. We met it actually in Dallas before. That was the second time we met. That's right. Anyway, trying to get us all squared away. For those of you guys there's another Rick that jumped on. This is Dean in Oklahoma. Don't ask me why Dean in Oklahoma goes by Rick, but he does. Anyway, Dean in Oklahoma has been also listening to the broadcasts, and a dear client of our group and us forever. So there's two Ricks, but he goes his moniker in the chat room is Dean in Oklahoma. And to make it even more confusing, there's a gentleman by the name of Skip in Oklahoma that some of you might remember from the chat room. He's not in the chat room right now. I haven't seen him active in a while, but I've known him forever, and I've actually seen him since, you know, in the chat room. But I know that I think he sold his company, and everything's kind of I think getting the inclination from him, and I've met him in person, that things are a little fast moving right now. So I mean, if I sold my company, it wasn't not in this industry. I'm just saying, if I was like, you know, made widgets or whatever I did and, you know, sold my company, probably the last thing I would want to be doing right now is trading. If I didn't come from the trading environment, I'd be like, whoa, slow down, partner. I'm gonna go chill out for a while. Anyway, so anyway, let's get to the markets. Let's get to talking shop. So sorry guys, a little bit on a tangent there. So, but I just wanted to kind of explain to you guys some of the dynamics in the chat rooms, so you guys kind of understand some of the backstory. For those of you that don't know Amir in Maryland, I've met Amir, who's also in the chat room. Guys, for those of you that are like new from the Forex Flow live room, Amir, by the way, I've met Amir in person probably 6 or 7 times. He's got a huge backstory that one day I'll take the time to explain to you guys. For those of you that don't know him, I love Amir. One of my more favorite people on the planet. So just so you guys all know that. And very dear friend of ours. There's a big backstory, which you could go back and listen to some recordings, but I'll do it live on our webinar, have him as a guest sometime. He's just, one of the very special person. And not that kind of special, but very special. All right, let's go to, I know you guys might say this, you think it's special, something anyway. Alex said, hey, I thought Amir was Amira. I thought he was a she. No, Amira listens into the webinars, but Amira doesn't really jump in. But Amira is in Israel. Amir is actually Iranian, well, half Iranian, or no, full Iranian, excuse me, Iranian, but he's an Iranian American and lives in Atlanta. But Amir, he's a completely different person. Alex is, different person. All right. And Raj says Amir has the dirty dad jokes too. Oh yeah, Amir has a lot of dirty dad jokes. I tell you, I just love Amir. But we've been through thick and he's been through a lot, and I feel like with our community, we've been through a lot of his ups and downs in the last 10 years. So like I said, we'll spend some time talking about it at some other time. Let's get through the market. So let's start with the euro. So here's the euro, and you guys pretty much, if you were listening to the FA.C.E webinar, you already know my opinions here. This is going to be pretty big resistance, 119.10. So let's write that down. But let's make the assumption we're going to break it. I don't think we're going to break it, but if we do, this is going to flip to bullish. Just letting you guys know. Today it's not. Today I'm going to keep it in range, but if we break above that, we are going to probably bullish, because then I think the euro dollar is going to trade back up towards 121. I'm just telling you guys that out loud, because that's how I feel. I feel that if the euro breaks this 38% retracement, we're going much higher. All right, so next resistance would be 119.40 in case we break. Okay. Support today. So support is going to be back at this channel support at 118.50. I think we'd be pretty lucky if we got to 118.50 today. and I'm short, so take it for what it's worth. Cable. So this is surprising. I really expected the sterling to act better today. I really, really did. I'm like, oh man, here goes the sterling. We're gonna squeeze. We broke we're above the 200-day moving average. Above the 618. It's gonna start squeezing. And I'm long euro sterling, so that really, that to me was not going to do me any favors if the sterling started squeezing higher. But I was kind of bracing for it. In my mind, I'm like, okay, well, here it comes. We're gonna squeeze. I'm really surprised that we haven't. And my assumption is, if I'm long the sterling, I also feel that same way. Like, oh crap, how come this thing didn't squeeze? Right? Right? Okay. Not saying it can't. I'm just saying I'm surprised. Okay, so 138 is support, 139 is resistance. It's a 78% retracement. I'm going to keep us in range. Aussie dollars. I fear those people short Aussies right now. I mean, that has been a pretty epic squeeze, and I have to hand it to Benedict. Benedict in our chat room, he got long down here at 71 and something, and he had the harmonic pattern pegged. You have to go back and search his charts. Go back, to even last week. I think we talked about it. I want to say he was looking at something that looked like I want to say it was something like that. Anyway, he expected us to revert back to 75 cents. And I was like, no, wow, you're really asking for a lot there. But damn, if he's been spot on. And I did not expect to move this big. And Alan said it was a tremendous call by Benedict. Yeah, but for those of you guys that don't know Benedict, he is a bank. He trades at a bank on a desk. I'm not going to tell you what bank, and I'm not going to tell you what he trades. That's his own private stuff, right? But he can trade FX working for this, and it's a big bank too. And he's been a very dear friend of mine for years. He actually sent me these little Chinese, when he went to China about probably 6-7 years ago. He sent me these little Chinese. I keep them in my guest bedroom now. To protect our guests as they come in. But the
Chinese what? Little Chinese that you keep in your bedroom. That could be a million things.
It's it's the large Chinese clay warrior statues. I forget what their name.
Oh, okay.
Shoot, I can't think of it right off the top of my head. Lost for words. But he sent me a bunch of little miniature ones, and I keep them on our not samurais. I keep them actually on our bookshelf that's in the guest bedroom. So, when people stay with us and they want to read a book, there's blah, 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 blah. The Terracotta Warriors. Thank you, William. Thank you. Yeah, it's the Terracotta Warriors. He sent me a bunch of those from China. When he came back like 5 or 6, 7 years ago, it was really nice. And so Benedict's a really good friend I consider him a very good friend. So anyway, he's a really, really good trader though. And I've seen him really, wow, look at stocks are getting absolutely smashed right now at the open. I've seen him really evolve over the years, which has been just a wonderful, wonderful thing to watch. So anyway, Aussie dollars. Resistance 75, really we can get up to 75.20, and that's going to be big. That's going to be right here. So let me grab this. Let me get rid of this. All right, I'll just move it right here, and let me get rid of this. So 75.20. big resistance, and we are in range. I can't be bullish, but well, intraday I can be bullish, but I can't be like, oh, I'm buying the Aussie right now because I'm looking for 77 cents. That there's just no way. I missed this move, and I think we're longer term, we're more range bound. I am going to buy any significant dip that we see in the Aussie from here, though. When I say significant, I'd say maybe 72 cents, something like that. But I still think that the Aussie is at risk. I mean, if stocks get slammed lower, I think the Aussie is going to get slammed lower too. So, and remember, we are at all-time highs in stocks. I know we're down a little bit this morning, but that doesn't matter. We correct 10% in the stock market. The Aussie is going to go lower, in my opinion. Unless, here's the only unless. I'm going to just give this to you guys. So somebody, one of the Forex Flow guys that came over with the Forex Flow traders had mentioned about that dam in China. That I forget what the name of the dam is right off the top of my head. The one that could bust at any time. That's a situation where if
Van Damme.
The what?
A bad joke. Van Damme.
Oh, okay. You're a dad, and your dad jokes are going to get progressively worse as you get older. Just so you know that, Steve. That dam, if that dam breaks, that dam, big dam. Yeah, Brand said that big dam, the big dam. Yeah, that one. If it washes out and breaks and busts during the rainy season, and which I think we're out of that right now in China. But if that thing busts, that's one of those situations where stocks would get demolished. We would see, because so much of China would be put on hold, basically, that would crush like supply chains globally. I would think that global stock markets would be down 10% on that alone over the course of a day or two. But the Aussie dollar would be significantly higher. And so would every commodity currency, because the tax that would be on commodities moving forward would be nutso. So anyway, I'm just saying that just to say it. But so the Kiwi squeezed me out. We hit the 127% extension. I had to, of course, I had to pick the one that's really bullish here, because this one is really the only one that's been bullish. It's outperformed. And remember, New Zealand also, the RBNZ said, it was a timing issue. There's a error. They should have started, raising rates, blah, blah, blah. And, so that is actually what turned the Kiwi off the lows right there. So anyway, support is at 70.90 on dips. And resistance is going to be 71.70. And I thought I'd stand in the way of that, and I got hurt. I did. I gave back some profits, standing in front of that freight train. So that happens. Canadian's weak, but not that weak. And I'm still very hesitant about crude oil. If you guys don't know what crude looks like right now, crude is struggling up here at this trend line resistance, 127% extension right here. So I'm real skeptical that crude can go much higher. So because of that, I think that the dollar Canadian lows we're getting close to them, like this support. So anyway, 50% retracement comes in at 124.80. Let's just call it 85. I'm going to write that down as support. And I'm going to keep us at range here. And, obviously resistance on any rally at 125.80 is probably going to be sticky today. So, but I think that the Canadian doesn't look horrible right here. I mean, I wouldn't want to be necessarily, I'm not sitting there, I want to be long, but I don't know if I'd really want to be short either. Chad asked if this is a big head and shoulder pattern. No, I don't think it is. But and I mean, if you guys played this as a head and shoulder pattern, first of all, I hate you, because you guys know that I very much dislike head and shoulder patterns that look like this. I'm just kidding. I'm joking about the hate thing. But there's no arm. So whenever you have a head and shoulder pattern, you have to have an arm, shoulder, head, shoulder. But people still play it, and it'll work out. It's bad habit, and bad habit will lead to less productivity for your P&L longer term, right? So, but Chad was thinking this is the larger head. That's possible, but what I think it is more or less is more of a, you know, higher highs and higher lows, right? So that's how I'm viewing it right now. I mean, that's a head, then that needs to be the shoulder. If that's the head, that needs to be a shoulder. That means we need to create another shoulder. Then we could talk, but you know, Chad said, okay, gotcha. By the way, Chad's been with us forever and a day too. Chad is a Sooners fan. Oh, I can't wait for his response here. He's such a Sooners fan. He doesn't even know what to say.
Is it okay that I have no idea what that is?
It's Oklahoma Sooners. No, he's a Purdue fan. You're a huge Purdue fan. Said go Tigers. Anyway, this is Saturday night. We take on the Dogs. You guys are gonna have a good season, I'm sure. Anyway, it's college football. Sorry.
Okay. That's why I don't know what that is.
Yeah.
That explains everything.
Yeah, that explains a lot, right? 91.92 for the dollar Swiss. Sorry, I'm just gonna go do this really quick. Chad's been in our chat rooms really for quite a long time now. I mean, I want to say years. I'm going years. When you can go put an S behind year, it's like, wow, it's
eons
and eons. So here's another interesting one. This is the US dollar Norwegian krona. Now, I'm not long yet. I want to be long. You guys know I love being long this thing, but look at this. This is what I want to share with you guys. We're holding the 50% support. Relative strength is divergent like all get out. And if crude is really going to roll over soon, I'm going to play this thing as a false breakdown because it's a double top. But if we get above 873, forget about it. I'm getting long. And I know, Steve, you're Mr. Norway Bull, but I have to say, and I'm gonna say this again, and this is for both you and Stelios, that's a big base. And with us at all-time highs, there's a reason why we're not down here at below 8. And so I don't think we're going back to 12, but I wouldn't be surprised if we see 950 to 10 again. So I'm playing it more as a constructive tactical long as stocks correct. So that's how I'm playing it. And that's why I tend to focus on the upside. I'm surprised this double top is not weighed on it more. That's all I'm going to say. 860, I'm going to write that down as being the low of the day, is going to be support. We have to mark it as bearish because it's got a double top. I'm just not feeling it. Okay. I'll mark it as bearish. I just don't, I wouldn't be short this. Just because I have a bias because of the technical, I put in, you guys know, I put down technicals the way I see it. I call it the way I see it. I don't necessarily agree with it. Like the US dollar Norwegian krona, I wouldn't be short here. You guys know that. Oh, the euro roll over, baby. I'm just not going to do it. And I feel like it's going to squeeze higher, but it is what it is. It is a double top until proven otherwise. Okay. Dollar max. This is another one. I'm long. You know, I'm long and I'm staying long. As long as we stay above 870, I'm long. You know, we have to break back below here before my position is very small and I want to be more. I want it to be more. Frankly, if we get back above 1993, that would be. We did break this minor trend line. We're holding horizontal support. Double top did complete. So support now is at 1983. Resistance is at 2003. And I'm keeping it range bound. 1983. I love 1983. I love the 80s. Who here loved the 80s?
I do.
Me. Best music ever.
I could sing 80s songs all day long. I love
Same here. I still listen to them.
You were listening to Teletubbies in the 80s. Just kidding. I'm joking.
I was actually not.
No, let's say like 1980. in the 80s, I was 10. So, you know, when you're, first of all, is pre-internet, right? So, you know, obviously the only thing that really is a 10-year-old or 15-year-old or, you know, in the 80s, when you're that age, only thing you really focus on is pop culture, music, right? So, and then that's the birth of the Atari. And so, and video games really is.
Exactly.
So I played, you know, Pitfall till wee hours of the night but listen to a lot of music. So you're always into music. So that's why a lot of that 80s music is so near and dear to my heart, because you know, that was the time that I grew up. Anyway, dollar yen holding support. We couldn't, that was my fault. We could not break below these lows at 109. I'm going to call it 109.55 is support, right? So resistance is, if for some reason we break through 110.30, and I'll tell you guys, I think that the yen pairs are probably done here, but man, they've been hell of a squeeze. Hell of a squeeze. I mean, yeah, you know, like you look at, you know, these yen pairs, this euro yen, Aussie, I think they're finished now. And so I think that the dollar yen is probably more at risk of breaking down now than breaking higher, especially with stocks looking the way that they look. But anyway, continuing on. Dollar index. Ooh, flirting with disaster. I'm going to mark that low as being important because we could end up doing a false breakdown, right?
Sure.
Yeah, or we could do this. Yeah, just extend it out a little bit. Or do this. Let's take the wicks, right? The wicks, right? I mean, I think this low is going to be pretty important, because if we now get below these lows, then we're done. I mean, the dollar's done. So 119.90, I'm going to write it. I'm sorry, 91.93. I'm going to write that down, and I'm going to put a lot of asterisks there because I do think it's important. I think we're going to end up being more range bound than anything. So resistance today for the dollar index, it's probably going to be like stuck in this range until we hit, unfortunately, the 22nd. So that's got coming in 92.40-ish. 5, I'll just call it. And I'm going to keep it in range for now. This will flip to bearish if we break through that support. So we break through 91.93, that thing's flipping to red, blood red. But for now, just keep it on range. Gold, what a piece of garbage, Stelios. Your gold sucks. Your long gold trade sucks, Stel.
Love you too, bro.
I'm such a sweetheart that
no, but
I'm willing to take off your hands for free any gold you don't want.
But
I mean, I can even fly there and take it if the quantity makes sense.
You guys know I'm joking when I harass Stelios about this, but you know, at the same time, he did point out that gold really is not doing well today. And you're absolutely right. I mean, you would have thought, right? Weak data, gold. I mean, gold should, I mean, I'm thinking the same thing too. I have to just sit here like jaw to the floor. How is gold not above that resistance? I mean, that's mind-boggling to me. And it's got to be to everybody else. I mean, it is, and I am just harassing Stelios on this, and Steve, but they also did say, and Stelios did say on air, you know, it's like, dude, you know, because Dale goes, wow, look at gold moving up, and Stelios is like, is it really moving up? I mean, it's not. It's really struggling here, and what concerns me more is on a longer term basis. Like that is concerning. I mean, I'll reiterate, I own gold, like, you know, physical, but this doesn't make me feel good. Like all this inflation, why aren't we breaking higher? I mean, how many people ask that question on the daily basis? Yeah, I had who was this, Steve, Peter Bookbar, he was on.
Mhm.
You know, he was on, and you guys probably listened to that interview. I mean, the guy's
Of course.
so bullish gold. He's his eyes are gonna bleed out gold.
Yeah,
You
same
know?
here.
Yours too. I mean,
Yeah,
but why?
the difference being though that neither of us, and I'm including Stelios in that, really cares about what happens with gold today, tomorrow, or the next week. Because
Right.
we know
Yeah.
we're going to be right in the time horizon we're willing to hold it. You know what I mean?
And that's what keeps me long. That's what keeps me long precious metals as a whole. But
And you know what the fun part is? That as long as they don't respond to what they should be responding, that creates some pent up energy. And once the market starts moving that way, it's going to be violent. I'm telling you in advance.
yeah, one of the best silver guys that I know, he unfortunately, you know, it's one of those situations where he was married to my wife's friend, and he's a wealth manager in Texas, and him and his wife got a divorce, and you know, we had to choose either him or her kind of thing. you know,
Okay,
that's
you should have chosen him and let your wife hang around with her friend.
yeah, but the fact of the matter is he did some kind of dicky type of things, you know. So I didn't really want to.
The wife says
no. He knows it too. That's why we lost communication. Anyway, that doesn't really matter. What matters is he was one of the better silver people that I've known throughout my life, and he sold everything at like 47, 48 bucks. I mean, everything. And he had so much silver. I would be very interested to talk to him today, but you know, we're not friends anymore. So whatever.
Give me his phone number so I don't have problems like that.
51,000. Bitcoin is bullish. And I think if we break that, we're going to see 57,000. I think that's entirely doable. Today, 52.4, but whatever. 52,400. And as long as we are above 46,300, we remain bullish. S&P is a little dodgy here. I'm a little worried about the S&P. Maybe because it's Friday, maybe because this data just sucks, and people start
the data is probably weaker than the market would ideally want to see. I have the feeling that the market would want to see a little bit of a weak data, a little bit. You know what I mean? Just to feel safer, having to do with any tapering schedule. But I don't think the market was expecting to see data being at like 30% of expectations. You know what I mean?
That's exactly what I've been saying is, you know, hey, I think the market wants, you know, it's the porridge, you know, not too hot, not too cold. I want it just right. Just right would have been 500,000 jobs.
Yeah, something like that. Something like that.
Jobs. That would have been perfect. But yeah, it's a little weak. And I think the market's like, ooh, you know, maybe that's not so good.
And for those that are interested about a little bit about the bigger picture, you know, the biggest danger, Blake, ahead, having to do with the financial markets and their strength, is going to be inflation remaining very high and data starting to really plunge lower.
Yeah, I know. Stagflation is definitely
exactly, because then the options left for a central bank are all bad. You know what I mean? You have to sacrifice something.
Yeah.
I say we sacrifice you, Steve.
The
sacrificial lamb.
Let him go. Let him go.
Me.
We're gonna let you go, Steve.
Okay, guys. Bye-bye.
No, but I agree with you. That's like what a central bank's worst nightmare. And
yes,
it is. And I know people. There are people that have been murmuring it for a while, but man, I'll tell you, it is. And I think it's a risk too.
And you know why this is a real conundrum, right? Because central banks, central bankers are 100% politicians. There is no independence, whoever has been in the markets for a few years and is monitoring central banks and still believes in the independence of central banks, I don't, you are a, case that can't be cured. Sorry. Central bankers are politicians. And the problem is that high inflation, when it starts getting really high, is a very political sensitive matter, as well as growth and stock market performance. So then they actually have to make a choice about two issues that are extremely hot politically. And that's the big problem then.
Yeah. Well, Steve, I'm going to let you take over and talk a little bit more. I've got to take a rest.
Okay, I thought you would say something else.
I got to take a rest now. You guys, look, great Friday to you all. I have an interview with Jim Welsh and Dick Matthews today that I'm going to be doing for Trader Summit a little bit later. Hope you guys enjoy that. And we got a lot to talk about with Jim on Trader Summit. So watch that video. Hopefully, towards the end of the weekend. Just want to let you guys know in the next few weeks, there are going to be so many interviews with so many great, talented people. I'm really excited that I get the opportunity to interview them all as of right now, but it's going to be cool. You guys are in store for a lot, and thank you all for your continued support. I'll see you in the chat rooms. I'll see you thank you. And if I don't see you in the chat rooms for whatever reason, I'll see you on Tuesday because we will be not broadcasting on Monday. So enjoy your long weekend, everyone. Thanks.
Bye-bye, mate.
Bye.
Bye-bye, mate. Bye-bye.
Bye. See you, Stel. And Stel,
yeah.
I really do love your silver trade. Love it. Just kidding. Hey,
it's his rate.
Blake the troll. Blake the troll.
Don't stop drooling on yourself, and hope your teeth feel better, man.
Yeah, man, it was just a feeling that got loose. But anyway,
all right.
Yeah, regarding metal, Steve, I've talked about this so many times, and people who have been members and who have been listening to our webinars, they know my last long silver trade, which you know how it works. I accumulate, then I sell. It took me pretty much 2 years for it to perform. I got long around what was it, $15 and a half. When COVID hit, I was down like 20%. But it's unleveraged positions. I don't care, and I should have bought more, but I didn't. And then 25-ish.
And by the way, the flash at COVID, it was unbelievable. So many people, people got out of amazing positions that immediately afterwards started performing magnificently, right?
And it was 18 months of nothing. And then we got the flash lower, and then literally 3 weeks later, it was up 50%. Or 50 something. So I got rid of it, and it was, overall it's a good, 50% in 2 years. Yeah, I'll take that.
Absolutely.
And this is my kind of trading. This is my timeline, time horizon with metals, not with other stuff. And I'm long already, and I want to add more. And I'm hoping for another little flush lower. I don't think we're going to get it, but I'm hoping for that. So I've said this so many times before. I'm either going to add lower or I'm going to add on the breakout higher. I don't care which way, but I'm going to add more. And obviously, I like to add at lower levels, but that's a different thing. Excuse me. So payrolls today, disappointed. We got the initial market move was faded. Now it's kind of coming back again. The euro is trying to get towards 119 again. Metals are doing well. Silver especially is outperforming. Stocks, don't know what to do with it. Interestingly, because I would have thought that stocks would be bid on this. But then again,
very short-term Stelios.
Early in the day.
This is, very early Stelios, as you said. But in the short-term charts, this is what I'm monitoring here. This little rectangle here in the S&P, we had this Rsi Divergence as well. 45 being resistance and support being at 45, let's say 15, to give it a 17 actually, but let's say 45, 15. So we are in essence in this 30 handle range. We got an all-time high earlier today, intraday, pre-market, obviously, right?
Yeah.
We break through 45.15. We have a first bearish development. Of course, we're talking about a very short-term type of bearish development, right? I mean, and people should not be jumping and, you know, shorting the hell out of stocks thinking, oh yeah, this is the top and everything else. But yes, this is going to be like a first little crack in the very short-term charts in order for us to really put a dent in this uptrend. If we're talking about longer-term charts, we have to move substantially lower. Specifically, in the case of the S&P, we have to move closer to like 44.20. So we're talking about roughly 100 handles lower than we currently trade, and break through that before we can start really talking about a potential for more downside. But if you're a short-term trader, this is the rectangle you should be monitoring. And as always, I pay more attention. There is an equivalent one you can draw here in the Nasdaq clearly, but having to do with the market indicator, I pay more attention to what the S&P is doing than anything else, because it's a broader index. It's an index people watch all over the globe. So I would first pay attention to that.
Yes.
Yeah. So as you said, we had an initial reaction lower in the dollar, but then this spillover to risk off, because the number was weaker, even weaker than the market would have wanted to see, is creating probably a little bit of a jitter, like, oh, do you really think that perhaps now that the stimulus is over, the economy is actually losing steam, and we're in danger of finding ourselves, in a slowdown, which I do think we are in a slowdown already from the pickup we had, and clearly because stimulus, has been reduced, and that was what was getting things going, right?
Yeah.
So this, for the time being, creates a little bit of a jitter in the markets, and as long as that's the case, that creates a little bit of a headwind for the dollar to fall lower, because risk off always means some people are flying to safety. Safety means one way or another the dollar, be it they just liquidate positions, which puts them back in dollars, be it they switch from risk on assets to some very short-term bonds, some bills, until they see what's happening, and if the if the environment is still favorable for them to be in risk assets. So we would have seen a much bigger move already lower in the dollar today. But as I said, this is what puts this is what slows this pattern. Now, having to do with the metals, on my chart, silver is breaking out from this descending channel to the upside. Gold had already broken out, as we had discussed, and we were saying yesterday how it had already produced like 4 indecision days in a row. And I said that, probably that's going to be all over tomorrow, and we are seeing a follow through. Now we're testing again this confluence of resistances. Blake showed it. It's a 61.8% fib from this previous high to the low. Also, these 2 previous highs are there. Yes, precious metals are not performing great, in comparison to what's happening. But on the other hand, technically speaking, I don't really see any technical argument to be short at the moment. Quite the opposite. If I had to be something for a short-term trade, I repeat, right? We're now talking about shorter-term trades. I would have to be long here, looking at both these charts. Now, we were talking about crude oil yesterday because crude oil was actually testing. Let me see. We just got some data. Yeah, ISM non-manufacturing PMIs incrementally better than expected, 61.7 versus 61.5. Undoubtedly, that's not going to move the market. It's almost as expected. And the big data that we were expecting today were the NFPs, and that's already gone. So crude oil tested yesterday this channel trendline resistance, didn't break out. Tested it again today, showing some indecision here. So, we remain in wait and see mode. Definitely, it looks healthy. It looks to me like it's very likely to actually break out, but should you be buying it on top of resistance? No, clearly not, right? From a risk reward perspective, if you had to do something here, you would be more likely to short it just because we're on top of resistance for a short-term trade lower than anything else. But I do believe that eventually we're breaking out and we're headed 80 plus to 80 plus levels in crude oil. Now, natural gas doesn't really care about all that because it remains extremely well bid in in very, very elevated levels. We are approaching the high that we had temporarily seen, which is at roughly 485 that we had temporarily seen in November of 2018. So we're approaching the almost 3-year high. I don't think you should be fading this. For the time being, it seems to be doing well. And in my opinion, we will be tagging and breaking through that high. It's a matter of time. It's a matter of when, in my opinion, not if, most likely. What else? I'm still short USD NOK. We're still below this double top. I still expect a lot more downside. Equivalently, USD CAD, and I forgot to mention that again yesterday. We talked about it the day before yesterday. Has now broken through this trend line support that you see here, and that is definitely a bearish development. Has also broken down through, let's see if it will actually manage to close below it, the confluence of the 50 and the 200 daily moving averages, both of them at 25.30. Definitely looks heavy to me as we trade where we trade at the moment. The cable, we talked about it yesterday because it was testing resistance. It's currently testing the waters above resistance. So it looks like it legitimately wants to break out now. Will it confirm that by the end of the day and week, since it's a Friday? I guess we'll find out, but it looks to me that, a bullish breakout is a very, very likely scenario. We were talking about the strength of Aussie and Kiwi. I told you not to fade it. They resume their move higher, unabated, very, very strong moves to the upside. Notice the Kiwi now almost at the corrective channel trend line resistance after a very big run higher. We went from like 67.90 to 71.40 within a matter of few days, which, for the volatility we recently get in FX, it's a pretty solid move to the upside. Aussie had a false breakdown in the equivalent channel. I think we can safely call it now a false breakdown since we've had this big move higher that invalidated it. I think they both look very, very good for more gains. Yes, at some point there's going to be a little bit of a pullback, but I do think there is a very, very good chance that they've both bottomed, and we're going to see them gain even more in the days and weeks ahead. Anyhow, I have to say that more or less that's all I had to say.
Steve, can you do me a favor? The first question, can it be mine? I
Oh,
have a ticker I want you to look at, and I think a couple of the people in the chat room are looking at it with me. I think maybe it's Laura. I'm not sure, but anyway, URA. It's a uranium.
Uranium. Yeah,
ETF,
yeah.
Yes. Have a look at that. I'm long that from 1810. From 2081. Sorry, I messed up the numbers. 2081 from 2 or 3 numbers. 2 or 3. Oh God, what's wrong with me today? 2 or 3 months ago, and it's finally making a move.
Come on, look at the chart. You have to give me credit, right?
Yeah. I know you drew it perfectly. But now it's today is breaking out above those highs. It needs to keep them, right? It needs to keep above those highs.
Listen, there is unquestionably the momentum higher shows an impulsive move. I don't care if it keeps the highs or not. This thing is going higher.
Yeah, and if you zoom out, if you look at the weekly chart, it's scary where it's going to go. It's scary where it's going to go.
Yeah. There is a lot more.
Oh, Chad is on this one as well. Good, great. We have been talking about this on the chat room. It's been not doing much over the past few weeks, but months. But now look at this move. I mean, it looks impulsive. Yeah.
Yeah, this is this is an easy depiction of the difference of a corrective move to an impulsive move,
Yes,
right?
yes. Good. Okay.
So
Thank
yeah,
you.
I mean, at some point there's going to be some pullback, but I think this is a very, very, very strong market, and we're headed much higher.
Yeah. Thank you, Steve.
My pleasure. Let's see what we got. Mara.
I don't know that
Mara.
one. What is Marathon? Oh, Marathon. Yeah, you've looked at this. Oh, there you go. Another.
Yeah, this has broken out as it seems. So yeah, it looks good. It doesn't look as good as uranium, right? There's no question about it. But you know, there's nothing really bearish with it. Momentum starts getting really healthy. We're seeing overbought readings in the RSI, which is a confirmation. So yeah, it's not the best looking chart I've seen, but you can't be short. I think it's probably headed to the highs. As I said before, not enthusiastic about it, but you know, I don't really have any bearish case argument. Now, having to do with this one and TLA, you know, we had a look at it back there. You know, this seems to be working out nicely. I think this is some kind of a bullish consolidation, and we might be breaking out imminently, right? You see what's happening here. So be in the lookout for a bullish breakout. That's what I think is the by far the likeliest scenario in that developing. Look towards 200 next, and we see after that. Now this one has also broken out. We were talking about it as well, being a symmetrical triangle, and at all Netflix has broken out. Where is the next upside target in this? There you go, some bullish targets, 625, 665. These are the next two upside targets. Really no reason to not be bullish as long as we trade above like 557. Bug. What is bug? Is this the one? Yeah, this is bullish. You know, no matter how you look at it, this is bullish. There is your bug heading higher. Next target 3340. We're almost there, by the way. Then we have the 100% extension of this, which is there, 3560. Ethereum, a copy of BTC chart. Okay, yeah. Ethereum. Unstoppable. On its way to the all-time highs, right? Bullish above 3370. We already said that breakout above 3370 was a very bullish breakout, and next stop 4400 roughly, right? You can be bullish above 3370. You know, no real technical argument pointing in the other direction. Anything else, guys, girls, before we call it a day and a week? IBM. Ooh, haven't had a look at this for a very long time. Some kind of a very prolonged corrective pattern taking place here. Listen, first response, and it's a very easy one, trade something else, honestly. Trade something else. Looking shorter term, this might produce some kind of a bullish breakout, but I'm still in some kind of a prolonged move lower. I don't like it. I wouldn't be buying it. I think there are much better opportunities out there. Put your money somewhere else. Hey, Leon. Hi, Steve. Hope you're doing well. What's platinum? It can be next natural gas. I agree with you. Leon, I had called you the other day, by the way, to see how you are. Didn't find you on the phone. I mean, a few weeks ago, just before I left for vacations. I agree with you. This is what I'm looking for in platinum. I think, first of all, that platinum has really underperformed for a long period of time, even other precious metals. But I do think that this pullback in platinum is corrective. So I do think that eventually we're breaking out, and platinum has a lot of catching up to do with a lot. First of all, it has underperformed gold, silver, etc. Right? I think it has a lot of catching up to do, and I do believe that platinum is going to be trading back to 2000 at some point. So yeah, I do believe that for buy and hold type of investment, platinum is definitely one of the preferred ones. Platinum is metal for the green economy also, yes, which is going to be another thing that boosts it, because you see all the green economy shift and push and pull. Now having to do with this, Asan, we talked about it. This was a symmetrical triangle. We talked about it potentially, pushing higher following earnings, breakout from the triangle, breakout from the trend line resistance in the RSI. We talked about it post-event, if I remember right. And I said that most likely this is a valid breakout unless we see it immediately breaking back within the triangle. Then it's going to be very bearish, but that doesn't seem to be the case. It seems to be holding its gains, so I would definitely be looking higher for it. Now, as I said when we had a look at it, I think yesterday, I can't really give you any upside targets because no previous price action there, not even a proper pullback to get extensions. But if you remember, I told you at the end that round levels like 100 in this case are acting as magnets. So 100 FSLY. Yeah. I remember us talking here about the potential of a little breakout to the upside and then another move to the downside, because I think that this move higher is another move that has corrective characteristics, and nothing has changed since we said that. So this seems to me probably another corrective pullback, but I do think there is a big danger that this is going to be again resolved to the downside and push to new lows. CCJ. Okay, yeah. Bye-bye. Yeah, this is, it already played out with its corrective move, which took the form of a pennant. And you can see the impulsive nature of the move higher. So there are your upside targets. 23.75 next, 26 after that, etc. I think it looks very bullish. Yeah, I know today's candlestick doesn't seem that healthy, incrementally new high, then a pullback, but the impulsive nature of the move higher is undoubted from what I see on this chart. So I don't think you should try to fade this as a false breakout higher. That's what I think. My pleasure, Laura. Okay, so I wish every one of you a wonderful weekend.
Thank you, Steve. Thank you, everybody. Hope you had a good week.
I'll speak to you again on Monday. Bye-bye. Enjoy.
Bye-bye.